Many of you, and our clients in particular, know that my favorite topics are around retirement and insurance. Basically, helping you build your wealth and protect it. Today's video on annuities combines both of these favorite topics of mine. So what's an annuity? An annuity is a contract between you, the owner, and an insurance company. Whereas life insurance protects your loved ones upon your death, an annuity protects you and provides you with regular income, a recurring paycheck while you're still alive. It provides income generally during retirement, and it provides this income for a specific number of years, or in the most ideal situation, for your entire life post-retirement, so you don't outlive your money. In the simplest terms, think of an annuity as a way of giving yourself a steady income in your later years when you're no longer getting a regular paycheck from work. This video is the first in our annuity series. By the end of this video, you'll know what an annuity is and when you would consider buying one. Over the next few weeks, we'll also talk about the pros and cons of buying an annuity, the different types of annuities there are out there, as well as the primary ways that you can customize an annuity to meet your specific situation, because there are many ways you can do this. For our loyal subscribers and viewers, welcome back. We love you guys. And for those of you new to Diamond NestEgg, we love you too, and welcome to the #1 place to learn about money, investing, and retirement. I'm Jennifer, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17, and graduated top of my class from NYU and Harvard Business School, studying finance and business. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about financial literacy and education. Please note that Diamond NestEgg is a financial literacy education and coaching company, and that I'm a licensed life, disability, and health insurance broker. We are not a bank, securities broker, legal, tax, or financial advisor. So as I mentioned, an annuity is a contract between you, the owner, and typically an insurance company. That's why I can talk about this stuff all day long, even in my sleep, and also why I'm not allowed to talk about it over the dinner table. An annuity is generally most suitable for you, your parents, or loved ones if you or they fall into one of these two categories. Category number 1, you want to be certain that you have a predictable monthly income in retirement and you don't want to outlive your money. Running out of money is the biggest retirement worry for almost everyone. To buy your annuity, you would basically hand over your cash to me, typically on a monthly basis, but this can be quarterly or annually as well. And you do this over a certain period of time, say 10 years. And I give the money to the insurance company, of course, right? The insurance company then puts your money into different types of investments. Think bonds, stocks, and so on, depending on the type of annuity you buy, which we'll get into in later videos. Most importantly, the insurance company promises you a stable, guaranteed monthly income, typically in retirement, when you're no longer getting paid on a regular basis. Most people buy an annuity in their 40s or 50s because it takes time for the money in your annuity to grow as the insurance company invests it on your behalf. When you pay into your annuity on a monthly, quarterly, or annual basis, the money that you put into it is not liquid. So you can't easily take it out like with a regular savings account without incurring penalties and charges. In fact, you shouldn't withdraw or be taking payments from your annuity before the age of 59 and a half, because you'll have to pay a 10% penalty on the taxable portion of whatever you take out, plus any regular taxes due on that money. This is one of the reasons why our younger clients and those early in their careers don't buy annuities. They still need that liquidity. But if that's you, keep watching, because an annuity might be a good solution for mom or dad. What one of our clients is in the process of doing for her mom, and I'll explain this in a few minutes. The best way to think of an annuity is as a long-term savings plan for retirement, like your 401k or IRA, but with greater certainty, predictability, and ease. So certainty first. With an annuity, you will generally never lose the payments you put into it, that you hand over to the insurance company, what's known as your principal. So if you make monthly payments totaling $200,000 into your annuity, you should get back at least the $200,000 you put in. Compare this to a 401k or an IRA. There is no guarantee of principal. No certainty that the $200,000 you put in will be what you get back in retirement. Clearly, we all invest in our retirement accounts in hopes of getting our principal plus a lot more back. But at the end of the day, with investing, you simply never know. Loss of principal has happened. With an annuity, this simply can't happen. Well, with two exceptions, which we'll get into in later videos. There's always exceptions, right? And that's why it's important for you to really understand what you're buying and to make sure you work with a life insurance agent you trust when exploring annuity options, regardless of whether that life insurance agent is me or someone else you already have in your life. Whoever you work with in customizing your annuity or any financial product for that matter should be a fiduciary, meaning they should have your best interest at heart at all times, ahead of their own interests. This person should treat your money as if it were their own. As our trademark saying goes, everyone's financial journey is different, but I'd never buy an annuity that would cause me to lose my principal, and likewise, I'd never suggest that for you under normal circumstances. With life insurance, I always say it's complicated, but it doesn't have to be. With annuities, I'll just leave it at it's complicated. Watch the rest of the video and hit that thumbs up and subscribe button to make sure that you catch the other annuity videos so you can be the annuity knowledge king or queen and buy with wisdom. There is a reason that this video is the first of many in our annuity series. We want to simplify this complex topic as much as possible so that you can digest it in bits and pieces. And if you're seriously interested in a customized annuity that suits your life, family, career, and financial circumstances, shoot us a note on jennifer@diamondnestegg.com or on Instagram. So as I was saying, an annuity is like a long-term savings plan for retirement, like your 401k or IRA, but with greater certainty, because in most cases, you never lose your principal, the money you put in originally. That was the certainty part of an annuity. Now, let's talk about the predictability and ease part. With an annuity, in most cases, you know in advance what you'll be getting month after month when the annuity starts paying out down the line. You know that all you have to do is wait for that check from the insurance company to come every month. And you know how much it should be, or at least a range, say between $1,200 and $1,500. With a 401k or IRA, you'd have to go into your account, think about what you're going to sell, hope that your investments aren't down when you're selling, actually sell, and basically do this entire withdrawal exercise on your own every month. A lot less predictable, a bit more legwork, and potentially a fair bit of drama if you're retiring in a down market. Now, before you run off to your friends and family and tell them Jennifer, or as my kids like to call YouTubers, this YouTube lady said I should buy an annuity because it's better than a 401k or an IRA. I'm not saying that. What I am saying is that an annuity can complement your other retirement savings options and help you build wealth for the future. Basically, it's not about one or the other, but having both. If you can, especially if you're nearing or already in your 40s or 50s, so you can have your covered financially in your later years. You have your 401k, your IRA, and your annuity, all as part of your overall retirement strategy. And you have your life insurance to protect your loved ones and build generational wealth. You can take a look at our life insurance videos over here to learn more about term versus whole life insurance, building generational wealth, and the importance of buying life insurance even when you're young. Life insurance is definitely what you should be thinking about if you're in your 20s and 30s, regardless of whether you have dependents. And then annuities when you get older. Or you can take a look at our retirement videos here to learn more about 401ks, IRAs, and how they should be a part of your retirement planning. Yes, we have videos on almost everything, and if you find that something's missing, let us know and we'll do a video on that. So we just covered the first category of folks that would buy an annuity. Those that want a predictable monthly income stream in retirement and don't want to outlive their money. Now, let's move on to the second category of folks that would buy an annuity. Category number 2, you've received a large lump sum of money and want to exchange it for a steady stream of cash flow, either now or in the future. For example, when you win the lottery, or in Vegas, or get an inheritance or sell a business, and want to make sure that that large amount of money you receive doesn't all get spent in a relatively short period of time. We've all heard stories of the so-and-so that got a windfall of cash only to be left with nothing a few months later because so-and-so went on a few too many spending sprees. The most common example of folks buying an annuity with a lump sum, though, is when you retire and want to roll over the entire amount from your company retirement plan into something else that's more predictable and will last you longer, ideally for the rest of your life. This is the example I was referring to earlier, what one of our 20-something-year-old clients is doing for her mom right now. And guys, if you're enjoying this video so far or you've learned something new, please don't forget to give that thumbs up and subscribe button a love tap. YouTube loves all this love and so do we. And it also tells us that we should keep focusing on more retirement content so that you can build the biggest nest egg possible. Now, when you buy an annuity with a lump sum like this, basically put your money into an annuity all at once at one single point in time. The monthly annuity payments to you, the monthly check that the insurance cuts out to you, can start as early as 1 month from the purchase date, not years down the line, which is what happens when you pay into your annuity on a monthly, quarterly, or annual basis. Just make sure that you're 59 and a half when you get your first payment though. Otherwise, you'll be handing over a chunk of cash and penalties to the IRS. So today, we've covered who would buy an annuity. Next week, we'll talk about the pros and cons of buying one. So if you've enjoyed this video and want to learn more, be sure to give us a thumbs up and a subscribe so we know we're pushing out the right stuff. And as always, if you're interested in seeing we can help you tailor a life insurance or an annuity product to your individual situation, drop us a message here at jennifer@diamondnestegg.com or on Instagram. See you in a few days with another money-saving, wealth-building video.